Okay, hello everyone. So today is Wednesday, midweek. Okay, and we're in midweek, and let's start with gold. Now, the hours are up here, as you can see. Now, yesterday I didn't do anything, um, but if you did trade yesterday, yes, there was a swing day for gold, and the market did pick up from the lows there. I did think it might come a bit lower. It still might. Okay. So this Tuesday, however, though, turned out to be, well, a swing day. But I was thinking maybe we'd close the gap here and then kind of go up. But it didn't do that. So if it's not doing what I think is reasonable, then no need to run after it. But what will gold do today and how can we follow it up? Well, first of all, if we had a swing day and then we still we have another swing day this week, but that's still ahead of us. Two things can happen. The logical thing is to go to the next swing day in this flow. So if today there is a retracement to pull back and go up, I think it's reasonable to take it. So we can do some kind of a Fibo retracement. Now these are the hours of today. These are reasonable hours. And by this hour, the market can really gather some momentum, actually. Okay, so that's something. And as you can see, for us, a decent pullback is at least back into the weekly pivot. Okay, which, if that does happen, I think is an opportunity to go long then. So then we have an impulse wave coming back to go up. You shouldn't be taking on too much risk here because let's tighten this up a little bit and then I'll tell you why. Because we've got a downwards motion still happening, so sellers will come in. Remember I talked about this gap. There is another gap up here. Okay, so the market can still target this high, it can target that high, and that's fine. So if it comes down, I want to buy. So if they are going to target it, okay, then I can go with that flow. However, okay, the market can still come further down. So that's also okay because Tuesday was a swing day. It's done a big move. It's fine. And, afterwards it can keep pushing down. So we can have this down impulse wave, retracement, impulse wave, retracement. Then we can have another impulse wave. So that's still doable. So if we want to buy, right, you want to buy the cheap price and not be buying at high levels as such. Okay, so where else can we buy today according to the PSTs? Well, we've got the 58 level, which is 2742. So if the market does come back into that level as well, which is just here, I'm going to do this actually. I'm going to take that, not that. Oh, wait a minute. I am going to keep this here because this is the gap fill. So what I will do is I will move this into 2742, which is going to be just here. Okay, so if we do pull back weekly or lower, okay, we want to go in long again. Okay, but like I always say, don't buy expensive. It's just risky. Okay, and your stop losses need to be tight. You don't have much breathing space, and if things go pear-shaped, if they're going to go down, they'll go down, and you've got the daily, the weekly lower here. Okay, so there's no need to really take that excessive risk and buy at a high price. It's just not worth the risk. Okay, so we can treat this as such. If the market doesn't come back but keeps pushing up, then that's going to be a bit of a different story then. Okay, because then we'll have room to push up. Now, yesterday I said the market can, once it finds direction, you see it just keeps moving and moving and moving, and then it comes to the targets. And yesterday I did say we've got 10:45, 11:35 target once it finds direction, and it was pretty much a flow day, and it just kept flowing, okay, and which is fine. Sometimes the market does that, and where the market actually made that low is it 12:45, 11:45 around. This is the 11:45, right? So 11:45, 11:55. So let's say there. Okay. Afterwards, we had a bit of a chip chop here, but nothing heavy, nothing big. And then here again, 3:30. Okay, which is 2:30 on the platform. Nice starting, but that was all measured time. It was a bit tricky. It was a sandwich zone. The only time you would have felt confident is when that breakout really happened, and that's about it. Moving upwards, but exactly on time. Okay, on time, nice and easy. All right. So here as well, like I said, the market can either push up or come back for a retracement in order to push up. In any case, if you want to sell, though, you're going to have to wait for these levels, stops to be taken out, okay, and then sold off. Or if you're going to say to yourself, let me sell here with a tight stop loss, you should keep your lot sizes small, okay. In any case, selling should be done on the highs where they sold before, looking out for stop sweeps, or up here where they've done the high, and there's also a gap here, so be mindful. Let's take a look at the euro dollar. With the euro dollar yesterday, was like pretty much all quiet, as you can see, because it did the move in the morning in the Asia session, and afterwards it was all quiet. Okay, so there's not really much to talk about here during the day. If you sold on Monday like I did, you would have been out when you woke up, or if you're in Asia, you would have been like on top of it, because both of those trades got hit their profit targets, and it's all good. In yesterday here, I did say we have like a runner. Okay, it was like building into a runner. There's nothing much to do here, except if you know what a runner is, you just sell the highs at the trading hour. So selling the high at the trading hour, high at the trading hour is okay. This made a low at the trading hour, so the market bought. This made a high, so the market sold. So understanding the trading hours plus your technical analysis obviously just puts things in a better perspective. Now here, let's see. All right, so let's take a look at the euro dollar. Here we are. So yesterday, like I said, not a lot of action. Okay. So from here, if the market comes back up to close the gap and we want to sell again, it's not a bad idea. I think we still have room to pull back. Remember, we want to come back lower, but we're going against the flow here because that's the impulse. So we want to do like a like an A, B, C pullback into this zone. So going back up, PST is 62, price 1.05. And if we go back into 1.05, it's going to be there. All right, so if the market comes back up here, you can see that's the sell zone there. All right, so so that's the goodbye kiss zone there. And that's it. People's stops are here, so stop sweep and selling from there is like logical. Okay, so if we go back up, selling is okay. If you want to sell, let's say, if you say to me, but Marty, that's too far out. Well, I know, but the whole idea is price and time, remember? So I understand it's a bit too far out, but you see there's a gap there, okay? And this gap is a big gap. So if the market doesn't go up but keeps falling down, let's say they keep selling from this zone, okay, into the downside, that's fine too. Then you just let it go, okay? Because with the euro dollar, as you know, the swing day is was yesterday, Tuesday, okay, and today. So today is Wednesday, Tuesday, Wednesday. So Tuesday fell, going back up again, and then selling at the retracement to go back into 49.44, 1.0385, okay, and 1.0350. Okay, 0385, 0350. They're like reasonable levels to come into. Okay, 0350 is here. Okay, so it's doable. And also 80 is here. That's also doable. All right. We can get rid of this now. This is from yesterday. It's all done. Now from here, what you can turn this into, which we don't really have to draw anything. Okay, you can see now we're going sideways. Okay, so the market pushing up, selling also down is okay. But like I said, with the gap there, it's a bit tricky. So if you want to trade it, doing it on a daily PST retracement is your better option. But we should, retrace in order to go back up. And that 35, remember, is 1.0263. Okay, 0263 is fair bit down there. Okay, 0263 is the 25% level, but this is also logical. Remember, I said we need to come down either here, or it could even do a double bottom with a slight divergence as well. But if this is an impulse wave, we shouldn't go lower than this. So coming back into the 37.25 is very much desirable for us in order to pick up the pieces, go long. If our assumption is true, then that will be wave 2, and then we dive in wave 3 right at the beginning, and wave 3 should be the biggest wave, and that should go. Okay, so we should find ourselves all the way even higher than that, possibly back all the way into 1.1011 zone. All right, so that will give us a lot of opportunity to actually make some money. Okay, so in the interim though, day trading wise, pull up to sell down is okay. If you want to sell from these levels as well, I'd do it with a smaller lot size and not rush into stuff. Just do it at the right time. What else can I say? SB 500. SB 500 now, Tuesday was a swing day. So that's your Friday. Okay. And then we have a Monday. Yeah, on Dow Jones we had a Monday. So Friday, Monday. Okay. So this worked out both ways, didn't it? Okay, that was Friday. Monday, continue that. And then make a low. Okay, Tuesday, blue day. Okay, closes up. All right, which is fine. Okay, now can we follow that up into the next swing day? It's a question mark. There's still a gap here. All right. I don't know if they'll take that as an okay. Normally they like to break this one down a little bit, which they have done, actually stop sweeped it. But there's still room to push down. So we'll have to be playing both sides, won't we? All right, so here we are. And this could be a nice little turnaround, okay, into this zone. Okay, I don't mind this place selling off. Okay, so selling off here, not a bad idea. In New York today, it's going to be a bit it's going to be a little bit hectic. Okay, and that hectic situation will end at 4:45, let's say my time, and also so 4:45 and 6:45 are going to be your look and get ready, set up for those hours. Okay, so you need to be careful for that, and that's it. All right. And that's basically it. So watch out for the New York hours for this one. And this can still be like, market coming down after closing that gap, and it's fine. All right. Let's take a look at the gap for that. And that gap is over here. All right. So if we do go up, selling this zone again, selling it is not a bad idea. If you want to sell it again, it's not a bad idea. Okay. Monday being a swing day though, as you can see, it's like going up, looking like a retracement, nice and easy. And then selling in the New York session may not be such a bad thing at all. All right, so see how that goes. As in when we get to New York, like I said, wait for those hours because we've got news coming out. If you wait for those hours, it shouldn't be too much of a drama. At the end of the day, there's 3 to 3:35. Then there is 4:35 to 4:45, which is like 10 minutes, okay, as you can see. And then there's the 10 past 6 to 6:45, okay, so which is not a lot of waiting time. All right, so yeah, if the market does a sudden move down, okay, let's get rid of this sudden move down, let's say from 2:30 onwards, it does a sudden move down, you need to wait till 6:45 because that's how things are going to happen. Once it finds direction, it can be in this flow motion like yesterday. It's just flowing in that direction. So that's still what can happen. All right, so be mindful there. If you're going to trade this, we've got 10:55 my time, let's say 11 my time, and that's going to be 9 here. Okay, this may not be such a bad spot either for the market to kind of retrace down. Okay, and that's basically it. Let's take a look at Dow Jones, Nasdaq, and Bitcoin. Now, sometimes people may think that the video is a bit too long, but you have to understand the video is justifying ourselves while we're entering a trade. So you're not going to be evaluating everything in the video. You're probably going to just do 1 or 2 things, or maximum 3. So basically, you don't have to watch the whole of the video. But the video is a preparation, and it should get your head around what you want to do, because you certainly want to plan the day and your trade without mucking around. Okay, so this is Dow Jones. Now, Dow Jones is still going up. This is like a closing the gap thing, which we talked about, and on the weekly as well. It has closed the gap, so this is now going to be a little bit more tricky, isn't it? Now, this might actually give us a good trade as well, because with the Dow, Monday was a swing day, and that's your Monday. Wow, that's a good swing day, right? So that's all the way in there. Wednesday today, we have to fill in a gap. So from the highs, looking to sell as well is not a bad idea. This is where they sold before. Let's get back in there. This is where they sold before. So once again, this zone selling off. Not a bad idea. This is your bar. So we're in the zone. Let me get rid of that. Okay, let's get rid of that and do this. Alright, so it's a strong trend up, coming back into where they sold before, so we should get some kind of a sell reaction. There may be a stop sweep, so mind the hours. This is why trading at the right hour is really important. On the weekly, that is too far out. On the monthly, well, we are at 67, which is done. 44,400, this is done. 44,000, that was done on Monday. So not much to do. We just wait. All right, we just wait. But this is already a sign that people are trapped up here. You see everybody's buy order went in and then they sold, so all the buyers here, anyone above that line, is now trapped. So shorting it down would really mess up everybody who bought the high, and this is why we don't buy at the highs, all right? Because they do trap people. So I think pulling back here, it's not a bad idea, and the market can definitely do that. Okay, with news coming out, it's midweek as well. It can push us all the way back into the next swing day, and that's the gap there. So we could come all the way back into this zone or that zone where the market picked up. Pretty much, yeah. This is what we should be keeping an eye on, because the market sooner or later will want to come to that, okay, and also perhaps fill in the gap here. So these lines are not random. At the end of the day, sooner or later, one day or another, we're going to have to dip down here. It'll be a buy situation. If it does, we'll see then, but that's how it is. This Monday swing day turned into a Monday swing day. Now, this is a bit contrary to what I said with the SP 500, because SP 500 said if we close the gap, we should sell it off, right? Same here, if we close the gap, so we should look for a sell in the New York session from the highs, yeah. Same with the SP 500, if we go up and look for a short down. Let's take a look at NASDAQ. It is a on the SP 500 after the Monday dip, being the swing day, we had a blue day, so the market going up a little bit is also logical, and this is NASDAQ here, all right? So same with here. If it pulls back up, you know, definitely selling off may be the way to go, okay? As you can see, I mean, the market is bearish, but you can see it's got sideways twist to it, because this is the weekly. So for the past like several weeks, we're like in the sideways choppy mode. When we're in such a choppy mode, okay, you don't want to be mucking around in the middle somewhere. You go up, you sell the highs, you buy the lows, and you know, that's your playground. Your playground is up there and down here. In between, it's going to be choppy. If you sold before, you took profit, now we're pulling back up again to sell back down is logical, all right? Also, the market is going up. It's a rectangle. So two things can happen here. We're either going to accumulate and push up, or we're going to distribute and push down, all right? There's no other thing that can really happen. This is why selling the highs are okay, buying the lows are okay. Sooner or later, you're going to get stopped out one way or the other. If you get stopped out when the market breaks up, the pullback is a buy opportunity. If you get stopped out when they sell, then the pullback is a sell opportunity. Okay, and this is why we've got levels to come down into. Okay, let's take a look at Bitcoin. Bitcoin also doing a sideways motion, which is fine. This also went according to our swing days, didn't it? Yeah. Okay, so with yesterday as well, I said if it goes up, you can sell. And then I guess, when did this happen? After that close. So yesterday we had this zone. So yeah, market goes up, they sell off. Did I put enough price there? Let's take a look. No, maybe I put in that price, but that's how it is. Yeah, market goes up, selling off. It's because of the impulse. But remember, this zone is a sell zone. So selling is okay from the highs, just like with the Nasdaq I just spoke about. Selling the highs are okay. If it pulls back up, continuing to sell is also okay to push it all the way back down here. You can see that this is going sideways as well. So the safer places to trade is going to be on the swing days at the low end, or selling at swing days at the high end, matching it with time and price, obviously. Okay, in between levels, it's going to be a bit more tricky, but if you want to do it, all you got to do is do your technical analysis. Okay, so the market comes down, you want to be a buyer, you can. Market comes down, you want to buy, goodbye kiss, go up, yes you can, that kind of stuff. Okay, so because you know how to do technical analysis, it's not a big deal. But generally, selling the highs, buying the lows, and that's how I want to play it with this as well. This is the support zone. If it goes up and you want to sell again to push down, it's doable. But this is the number, these two, 57 and 60, it shouldn't break them. If it does, don't stand in front of it. 104,215 and the 50 that's the 57, and the 60 is 105,600. If it starts to break above these, don't stand in front of it trying to sell it. You will get smashed. Okay, so then leave it alone. The swing day for Bitcoin is Wednesday. Okay, so this is a good day to buy. Okay, why? Because it's a Wednesday and the market came down. Okay, so this is not a bad setup. Market comes down, does a good buy kiss. Wednesday becomes a swing day. Okay, so this is all right. We don't mind taking this as a trade. So if the market comes down first, okay, then you want to look for levels to buy. Where do you want to buy at? You can buy on that 98.86. You can buy on the 41. 98,600. So 98,600, 98,860. If we pull back a little bit, going up again is okay. If you want to do that on the 4-hour chart, same thing. You can come back into 90. What's that? 96. Well, you can probably come down into these levels here. Okay, I can't think of really anything else to do. If the market pulls back and you want to go up, I'm okay with that. Like I said, it's a swing day, market's down, and on a down market on a swing day, going up is okay.